So I've done over 800 hours of backtesting with hundreds of other traders in my community to perfect this hyper profitable indicator only strategy, and I'm going to finally release it to the public. If you've been struggling with not being able to draw complicated thingums and lines on the chart, then this strategy is going to be perfect for you because it requires no drawing, no special effort and skills. It's perfect for beginners looking for a reliable trading plan to stay profitable in an ever-changing market. Now, I must admit, I have 1,800 premium members, some of whom are complete beginners with no trading knowledge, yet they're still able to replicate the simple, literally copy and paste strategy to get results like these. And by the end of this video, I'm going to hand you the exact blueprint with all the settings and little details you need to look out for in order to make this copy and paste strategy profitable. Let's get right into the details. I'm going to make this video catered to a brand new trader, so bear with me if you're slightly experienced. So first, we'll use a platform called TradingView. This website lets you chart, but has one key feature other websites don't. It allows you to add special tools called indicators onto the charts that make trading easier. In this strategy, there are two indicators you'll be using. The first one is called the Simple Moving Average Indicator. This indicator is provided by TradingView for free. To access it, click on the Indicator tab and type out Moving Average Simple and click on the first one you see. The second indicator we'll be using for the strategy is the Breakerblock indicator. To add this indicator to your chart, revisit the Indicator tab and type in Breakerblock with signals. One should pop up, click it. So listen up. I'm going to tell you why these indicators are used, because if you don't understand these functions, you won't be profitable. Breaker blocks, what are they? The nerdy term is a failed order block that turned into another area of supply or demand. For normal people, it's like an area of support and resistance. It's essentially a resistance that broke and became future support, or a support that broke and became a new resistance. So there are two types of breaker blocks: the bullish breaker block and the bearish breaker block. Here's how it works. At a support, people enter a lot of buys. Suddenly, when the support breaks, people get stressed and want to get out of the position with no loss. So, when the price comes back to the support level, they close their positions at break even, causing prices to dump all the way. This is where we're looking to enter. For the bearish breaker block, price will initially be in an uptrend, creating higher highs and higher lows. As it is creating higher highs and higher lows, bullish order blocks are formed, which gives an area to long from. However, when the market decides to reverse, breaking the higher low and breaking through the bullish order block, this is when the bullish order block breaks and becomes a breaker block to sell from. For the bullish breaker block, it's exactly the opposite. Rewind the video if you're unsure, because this part is important. In summary, breaker blocks are a great way to capitalize when price action starts to reverse. Now, on to the moving average. We use them in our strategy because it is a good confluence to add when looking for an entry criteria. When price is above the moving average, it usually tells us that price is in an uptrend and price has intentions of going higher. On the other hand, when price is below the moving average, it tells us price is in a downtrend, aiming to go lower. So, with the understanding of how breaker blocks and moving averages work, let's optimize these indicators for the best results possible for our strategy. For the simple moving average indicator, change the length to 44 as seen here. I've tried and tested different lengths of the moving average to best suit scalping. 44 was a sweet spot as length isn't too high of a number where the moving average rarely gets tested. And it also wasn't too low of a number where the moving average mirrors price action and there would be basically no point to the indicator. For the breaker block indicator, leave it as the original settings. There isn't a need to change it. One key feature to note for this indicator is when price creates a breaker block, you don't have to draw anything on your charts. The indicator will automatically draw them for you, indicated by a green color box, which represents a bullish breaker block, or a red color box that represents a bearish breaker block. Now, onto the meat and bones of the strategy, there are 5 steps you need to follow to the T in order to be profitable. Any deviation from these 5 exact steps will result in a loss. I want to stress this point because this strategy works and it only fails if you don't follow it 100%. This is where I suggest you take out a notebook and a pen and write all the steps down. If you need to, rewatch this part of the video. Step 1. Determine your overall trend of the market on the 15-minute time frame. This helps you to decide whether you're looking for buys or sells. You can do this by marking out your highs and lows on your chart. If you see a higher high or higher lows, you have an uptrend. If you see lower highs and lower lows, you have a downtrend. Let me give you an example on the chart. As you can see on the Euro USD chart, there are higher highs and higher lows forming. This indicates that this pair is in an uptrend. The opposite is true for a downtrend. Step 2, look for a breaker block pointed out by the indicator that is opposite in direction of the trend you have identified in step 1. This means it's in an uptrend. You're looking for a bearish breaker block, and in the downtrend, you'll be looking for a bullish breaker block. This is because we're looking to capitalize on a reversal in the market, and a breaker block in the opposite direction will tell us that a reversal is incoming. Step 3. Wait for the price to retest the breaker block. There are 2 scenarios that you need to take note of. Scenario number 1, when looking for a sell in an uptrend, ensure that price is below the simple moving average during the retest of the breaker block. This is important as a confluence to have, as the moving average acts as a resistance for price to continue lower. Scenario number 2, when looking for a buy position in an uptrend, ensure that price is above the moving average during the retest of the breaker block. The moving average will then act as a support level to help push prices higher. On to step number 4. Enter a trade with stop loss covering the breaker block. Now, it is important to note that for this strategy, since we are trading on the 15-minute time frame, a minimum of 10 pips stop loss is the best for this strategy. So, if the stop loss covering the breaker block is less than 10 pips, I will place the stop loss at the most recent swing point. For those of you that don't know, here's a brief explanation. A swing point refers to a high or low in the market. Step 5, target placements. For a take profit level, we'll aim for a 1-to-2 risk to reward ratio to get in and out of the market fast. At a 10 pips profit, I will place my stop loss to break even to go risk free on the trade and let the trade run to the full take profit. I will explain more of the reasoning towards the end of the video. Now you have the exact steps to execute the indicator strategy. Let's hop onto some examples to demonstrate on how to use it. Looking at the GBP JPY on the 15-minute time frame, price has created lower highs and lower lows, indicating a downtrend. That tells us that we should be looking for a bullish breaker block to form in order to consider buys. As price broke higher, the breaker block indicator marked out a bullish breaker block. Next, I'll wait for price to retest the breaker block, and when it does, I'll check to ensure that the moving average is below the current price as our added confluence to buy. Since the moving average is below the current price, this buy setup is valid, so I can place a buy position with stop loss below the breaker block with targets for a 1-to-2 risk to reward ratio. So let's see how it plays out. And there we go. TP smashed. Let's take a look at the next example. Here, on the CAD JPY chart, seen on the 15-minute time frame, price action has recently created lower highs and lower lows, and once price broke the most recent lower high aggressively, the breaker block indicator flashed a bullish breaker block as seen by the green box. Once price retested the breaker block, I checked that price was above the moving average, which gives us an extra confirmation for an entry here. So I place a long here and stop loss below the structural low, because the stop loss from entry to the end of the breaker block is less than 10 pips. Finally, I'm targeting a 1-to-2 risk to reward ratio. So let's see how this trade plays out. Great. This trade ran a 1-to-1 risk to reward ratio, so we got taken out at BE. But that's fine, as it's part of a risk management strategy. Here on the Euro NZD chart, price has created a downtrend price action as seen by the lower highs and lower lows. Once price broke the most recent lower high, the indicator flashed a bullish breaker block, telling us to look for buys. So when price retested the order block, I saw that price retested the moving average as well and closed above it. This was when I took a buy with stop loss below the structural low and a targeted 1-to-2 risk to reward ratio. Reason for picking the structural low for my stop loss is because the breaker block is less than 10 pips wide, therefore requiring me to be more conservative with my stop loss to allow the trade some room to play out. So let's see how this trade goes. Okay, the trade ranged for a little bit. Fortunately, our stop loss was placed properly at our swing low allowing for the trade to play out and hit our TP after a while. Now that you have seen the full breakdown of how my indicator strategy works, there are 3 pitfalls that you need to look out for in order to avoid unnecessary losses. Pitfall number 1. When an X shows up on the indicator, it means that there is a chance that price won't respect the breaker block, leading to a lower probability rate. When this appears, you can look to de-risk, perhaps closing some positions to ensure that you don't take a full loss when the breaker block fails to hold. Pitfall number 2. Do not enter a trade if the price is below the moving average for buy trades. If the price is below the moving average, it tells us that price is potentially going to change direction, because if price is below the average of the past 44 candles, it tells us that price is bearish. Price is coming down. Therefore, it would not be a good indication to long when price is below the moving average. Likewise, when price is above the moving average, we do not look for shorts, as it tells us that price is currently higher than average on the past 44 candles, meaning that price is bullish and therefore isn't a good indication to sell. Pitfall number 3. Do not, I repeat, do not trade high impact news using this strategy. We do not want to take the extra risk of uncertainty when trading with this indicator strategy. Now, let's go into the backtesting data and what I found over backtesting multiple different pairs. I've picked the top 4 best performing pairs anyone can use to get profitable. Let's first ease in with what it takes to be profitable. With a 1 to 2 risk to reward ratio, all you need is a 33% win rate in order to break even. With anything more than that, you are profitable statistically. The higher the win rate you have, the more profitable you are. The 4 pairs I picked out were Euro USD, GBP USD, GBP JPY, and USD JPY. Each of these pairs I picked out, I've tested them with data over the past 12 months. I took trades when they were in all sessions, Asian, London, and New York. Took trades even when there was high impact news, so that I can have the most accurate data possible. So let's look at the stats of the backtesting data. On Euro USD, all trades given that are as per planned for the indicator strategy resulted in a 14% gain for the safe method. This is using a 1% risk per trade over a total of 59 trades. This accounts for all trades, including timings, which I don't personally trade, and high impact news sessions. The risky method gained similar results, giving us 13% gain over 59 trades. The win rate for the safe risk management style with no news trading and only from 12 p.m. GMT plus 8 in the afternoon to 11 p.m. GMT plus 8 at night yielded an average of 64.1% for the entire year of 2023, accounting for all break-evens and full take profits, gaining 11% on a 1% risk. On the other hand, for the risky management style, it yielded an average of 35.2% win rate through the year, but yet it yielded the same result. This means the risky approach for Euro USD resulted in more full TPs than the safe, but it also means it has a higher SL rate given the decrease in win rate. Apart from that, this pair is a pretty decent pair to trade this strategy on, as it's definitely profitable with such a win rate as seen as a percentage gain. For GBP USD, the stats are quite different. If you take all 91 trades, regardless of news and timing of the trade, you have yielded only 1% gain on a safe risk management style. It's still profitable, but that's not exactly what we're looking for. On the other hand, if you were to trade with your risky approach, not taking SL to break even, you will actually be down 15% for the year. However, if you're strict with when you trade the strategy using the safe method, trading between 12 p.m. GMT plus 8 to 11 p.m. GMT plus 8, and you don't trade news, you can see with a 13% gain instead of a 1% gain, and we have an average win rate of 64.1%. This tells me I should only be trading from 12 p.m. to 11 p.m. GMT plus 8 with this strategy, as it clearly tells me I'm way more profitable during this time period. On the other hand, for the risky method, where we don't manage our risk by not putting SL to break even at 10 pips profit, I'll be down 8% for the year, which is a no-go. This concludes that I should definitely be using the safe risk management style, as it yields a high win rate and higher profitability. So let's take a look at GBP JPY. Here we can see that if we take all 75 trades given throughout the year, it would be up 13% using the safe method and only 3% up using the risky method. Now, if we include no news trading and trading within our 12 p.m. to 11 p.m. trading time period, the safe method has a win rate of 65.3%, giving us a total of 16% gain, already increasing our amount we earn. If we're using the risky method, it will only give us 12% gain and a way lower win rate of 38.4%. With similar results as the other pairs, the safe method wins again. And let's take a look at the last pair I'll go through with you guys. USD JPY. If we take all 86 trades given throughout the year on the safe risk management mode, including news, and outside our trading timings, I will be up a good 10%. On the other hand, for the risky method, I will be down 2%. Looking at stricter metrics, if we don't take news trades and stick to our trading hours of 12 p.m. to 11 p.m. GMT plus 8 using the safe method, I will be up 6% with a 61.7% win rate over 47 trades, which is pretty decent given that this pair is pretty volatile with the JPY interventions that happened last year. However, if I use the risky management style, I'll be down 8% with only a 25.5% win rate. Of course, there are more pairs and more data, but they show you similar results with the safe risk management approach, winning over the risky management approach. So let's say I trade all 4 pairs, and I trade the safe approach with no news, sticking to my trading hours. I will be up a total of 48% of my account for the entire year. On a 100K funded account, that is $46,000 a year. Basically a yearly salary for you if you follow this indicator strategy to the T with no deviations. To me, that sounds pretty good. Not sure about you. So there are 3 key lessons from this backtesting data to take note of. Number 1, stay away from high impact news. We don't want to take the risk. If you're new and unsure, visit forexfactory.com to check when the high impact news happens. Number 2, only take trades in the 12 p.m. to 11 p.m. GMT plus 8 window. Trading outside this timing will result in more losses. Number 3, always set your stop loss to break even when you're 10 pips in profit. This ensures you don't take unnecessary losses when scalping with this strategy. You can also choose to take partials at 10 pips and let the rest run to take profit to earn even more money using this strategy. There we have it, the Callisto indicator strategy that I have backtested for 800 hours, broken down to you into 5 simple steps. If you're someone that works a 9-to-5 job and doesn't have the time to scalp, do check out our previous video where we discuss a 90% win rate swing trading strategy covered by William, because this strategy allows you to set and forget. You don't have to constantly monitor the SL and TP. I'll link it down in the description below. Most importantly, if you feel like you need a community to vibe and learn and earn with, make sure to click the first link you see in the description below or the pinned comments to join our Telegram group. In there, we share free signals and analysis and even weekend crypto trade ideas. All this is accessible to you with the link below. Now, for what you've been waiting for, the blueprint for this indicator strategy, all consolidated into a cheat sheet we've curated for you. It covers everything I've explained here in summary, including the buy setups, sell setups, and the pitfalls to avoid. Use this alongside your charts when you are trading as a checklist to follow to gain similar results as our community members in Callisto. To access this, join our Telegram group with the first link below. The password to this PDF is CallistoFX Indicator Strategy. That concludes the video. I'll see you guys in the next one.